Hey everyone, Andrew here from Property Association. Looking at the Australian property market, looking at our major cities at the moment and saying, look, is it time to let go or time to hold on? And having a look at who should be looking at doing what in today's market. So again, guys, please like, subscribe, leave a comment, let us know what we can do, because we want to keep providing this sort of information and updates on the market. One thing I've always said and one thing I've learned is if we had a crystal ball when it came to the property market, we'd all be millionaires, but we don't. So one thing is we only know the top of the market when we look back and we say, oh geez, prices have fallen. And we only know the bottom when we look back and say, well, those prices have gone up. So not knowing where that is exactly, how can you make a smart decision in terms of, do I hold or do I jump out? And that answer won't be exactly the same for everybody because of our circumstances. For some people it's worth holding and for some people it's worth getting out. So just want to have a quick snapshot look at all our major cities and how they're sort of performing and what they look like doing. So you can see with Sydney and Melbourne, especially at the moment, they've come down from some great heights. Sydney, as our previous video, you can see we're sort of in line with that small correction of 2015, and we should see a little bit more coming down. Melbourne still has some way to go, and then looking at Brisbane, it looks like it's going to be relatively flat. Yeah, it could even creep up a little bit. Hobart has just really outperformed everybody in the last 24 months. And really should be looking at stabilising and maybe even coming back, considering it's on top of Adelaide, considering it's on top of Perth. Perth, we know it's very resource driven, but should be stabilising very shortly, and Adelaide should always be slow and steady as per normal. So looking at those areas as a snapshot, we need to then look at who needs to be considering whether they should hold or whether they should sell. Now, one group of people are people who are selling and buying in the same market. Now, when you're buying and selling in the same market, it doesn't really matter. In fact, if you're upgrading and the market is slowing down, you're actually better off, because those higher end properties, you can get a better deal. So for the people who are looking to buy and sell in the same market, just make sure you do that transaction quite quickly, because in a market where it's growing, you can find yourself, by the time you've sold, then started to look for a place to buy, the market shifts 40, 50,000 and it tightens your budget. So if you are buying and selling, make that transaction quite quick. In Sydney and Melbourne, if you're upgrading, I think you're in a better position, because those higher end properties are probably taking a bit of a bigger hit. And then we're looking at people who might have investment properties who are thinking, well, I want to upgrade my home, or should I be selling that investment property now to buy my home? And again, depending on where you're at, if I was in Hobart, I'd be as an investor, I'd be getting out. I think the growth there's sort of really peaked, and you can probably put your money somewhere else better. But if you were looking to sell an investment to buy a home, it then depends on where you have equity. If you've got equity in that property, my advice would be probably sell it to buy your home, because in markets where they're stabilising or still going to fall a little bit more, you sell, cash in, get your equity, buy your home, and then what you do is, once you've purchased the home, you then re-borrow against that home to buy back into the market. Now, there is a cost involved with that. There's a selling cost and a stamp duty acquisition cost. So, all this doesn't happen for nothing, but you also have the benefits of Sydney and Melbourne, falling markets. So you could actually, by the time you buy your homes, do that transaction, you could find yourself actually quite better off. And number two is the tax. The tax side of it is, once you purchase your home and then re-borrow against that home to buy an investment, 100% of that interest is tax deductible. Now, if you hold on to your existing investment, borrow against it to buy your home, then all that debt on your home is not tax deductible. And so it sounds complex, and that's because it is. And people that turn around and say, well, if you buy and hold property for 30 years, I can guarantee you none of them have gone wrong, because property is one of those things that's just grown in value. But it doesn't mean you can't be smarter when it comes to making your property transactions. And one of those things is, if you do have equity in investment property now, especially I can't see any marketplace from what we had a look at skyrocketing. So you're not going to miss out on all this capital growth by selling the property. And the 6% that it costs as roughly as a transaction of selling and rebuying in, you can actually make that up over all the tax benefits over the next 10, 15 years. And the way our market's looking, you can probably make it up in when you buy the next investment. So for those people who do have an investment with equity, looking to buy a home or upgrade a home, now's probably a time to get out. The third group of people are the people that are purely investors, might have 1, 2 or 3 properties. Those people, I would say in our major markets, it's too late to get out. Sydney and Melbourne, by the time you get out, pay the selling costs, think about getting back in the future. The market's got to drop by more than 6% for you to be in a similar situation. It's got to drop by 10%, and you've got to pick the bottom of the market for you to be better off. So this is a period now for Sydney and Melbourne where you hold. Brisbane as well, and Perth, I think you definitely hold, because there's not going to be much falls in those markets. Hobart, as I said, I'd be as an investor, I'd be getting out, taking my money and looking at some of those bigger markets like Sydney and Melbourne, and say, okay, where can I put that money? Because I can guarantee you, in the next 5 years, Sydney and Melbourne will outgrow Hobart. So you can actually take advantage of that marketplace and take advantage in that regard. So I just wanted to have a quick deeper look into our 2 major markets, which is Sydney and Melbourne, and what we can see with those is that basically one thing we can notice is that the Sydney housing market has actually probably was the first to start to hurt, and then you can see that Melbourne started to kick in sort of that sort of beginning of 2018. Now what that does show is that there's a correlation between prices falling for units and the market, in the sense that just because it shows that unit prices are doing okay, it could be just a reflection that, hey, we've just had a whole bunch of units settle that were sold 18 months ago or 2 years ago in a much better market. So those figures sometimes take longer to reflect when it comes to apartments for that reason. There's not as many brand new houses being transacted as there are apartments in Sydney and Melbourne. So the housing market is probably, the house market is a better reflection of where the market's at, because the unit market could be somewhat distorted based on all these brand new developments that are completing, which sold in a much better period of time. And that can be seen if you look at the statistics here, where you can see that it shows over the last 12 months that unit prices in Melbourne have actually gone up 1.5%. Now I would put that down to a whole bunch of units settling that were purchased in a much better period of time. And what I think this shows us, especially with the Sydney housing market, I would say houses in Sydney are very, very, very close to the bottom, if not there already. So that's something you've got to keep your eyes on, because once that market stabilizes, I think it's one that's not going to fall much more. It may be impacted by unemployment. If unemployment gets to 6% or so, we could see another 4 or 5% drop in houses, but I genuinely believe it's near the bottom. So when it comes to staying in or getting out, it really does depend on your circumstances, and there's no one sort of solution fits all. Some of the concepts around tax and whatnot are a bit complicated. So if you've got questions, make sure you let me know. Email me at andrew@propertyassociation.com.au. Subscribe, like, so we can keep giving you more of this sort of information. Let us know what you want to know in terms of your property needs, and we'll get onto those. But Sydney and Melbourne, definitely too late to get out, in my opinion, at the moment. Hobart, if you're an investor, get out. And if you're buying and selling, just do it quickly and you'll be sweet. Speak to you soon.